Hello, welcome back to Learn Oikonomia. In this video, we are going to look into a very important topic. This is the bi-monthly monetary policy announcement of 2022-2023, which has been recently made by our Governor of Reserve Bank of India, Shaktikant Das. So, in this video, we are going to discuss that. While making his statement on May 4th of 2022, the Reserve Bank Governor Shaktikant Das, he had mentioned that since the Reserve Bank, the Monetary Policy Committee has gone for a navigation through the difficult period which is created by COVID pandemic, Ukraine war, all these kinds. I mean, Russia-Ukraine war, all these kinds of things, all these kinds of events. He, along with his monetary policy committee members, have identified the need to be very much sensitive to go for policies that match with realities. So when we have to go to the war created by Russia as well as Europe, so this is considered to be something that is lingering as we are facing newer challenges. We know that we were stuck as a result of the COVID pandemic. Along with that, adding problems to the already existing problems. What we had is the Ukraine-Russia war, right? So this had created all these had created some disruptions in the supply chain. So as a result, we could see that our food, our energy, our commodity, etc., were drastically affected, were negatively affected. So we had what to say, food prices increasing, we had energy prices increasing, and we had commodity prices increasing. And this is what is continuing till now, right? Food inflation is there, energy inflation is there, and also we have inflation affected in almost all the sectors, not only with respect to Indian economy, and this is something which is experienced by almost all the economies. Especially if you look into the case of US economy, you could see that inflation has it has got a grip over the entire world. Now, coming to the war situation, again, we could see that the war was led to a globalization of inflation. That means that it has gripped the world. Not even a single country is spared now. The world has been gripped by the price rise or inflation. So the central banks in entire world, I mean the central banks of each and every nation have to face this, have to deal with this situation by going for effective monetary policies to tackle this, and the central banks are reorienting and recalibrating their monetary policies. Emerging market economies, like the case of India. In India, as we all know, it is a developing economy, but at the same time, it is emerging. It is considered to be an emerging market economy. So these economies like India are facing bigger challenges. If you look into the increased market turbulence, monetary policy shifts, etc., all these are happening with respect to these kinds of developing economies. So compared to advanced economies, we have many problems and we have much more challenges. And the process of economic recovery in the case of emerging marketing economies is also getting affected as a result of these international problems like wars, pandemic, all these kinds of things. As a result, during these kinds of difficulties or these kinds of challenging times, the Indian economy has remained to be resilient, supported by strong macroeconomic fundamentals as well as buffers. So, we have to see that the inflation, this has steeply increased. This has increased beyond the upper tolerance level. That means that our policies need to be very much, it should match with what we have today. It should match with our problems. It should be able to tackle our problems. And a large part of the rise in inflation is primarily attributed to the supply shocks created by the Russia-Ukraine war as well as the pandemic. So in these circumstances or in these situations, the Reserve Bank Monetary Committee or the Monetary Policy Committee, they have started a gradual as well as an orderly withdrawal of the extraordinary accommodation instituted during the pandemic situation. So actually this policy members or the policy committee, they have taken some timely actions to limit the economic damage emanating from the COVID pandemic, and also they have already reprioritized their policies to tame inflation without losing the sight of growth requirements. We know that the price stability as well as growth, these two are equally important when we take the monetary policies into consideration, because these are two important motive of our monetary policy. Not only this is with respect to India, but also the same is the same is for all the economies. The monetary policy framework of all the economies, emerging as well as advanced economies, would be dealing with price stability as well as growth. So, in the case of India, the approach of the Monetary Policy Committee underscores a commitment to move towards the normal monetary conditions in a calibrated manner. So, in his announcement, Shaktikanta Das has told that the committee would be remaining would remain as focused on bringing down the inflation closer to the target and also fostering the macroeconomic stability. I have already told that in the announcement of Shaktikanta Das, there was a stress telling that the inflation has steeply increased, and this has increased much beyond the upper tolerance level, and the Monetary Policy Committee is taking many measures to tame this inflation. So, what were the decisions and deliberations of the Policy Committee? So, against the background of war, against the background of what to say, the pandemic, against the background of what we are facing today, against the background of inflation, all these things, there were many rounds happening with respect to the meetings. I mean, there were many meetings held, and based on the assessment of the decisions taken in various meetings, there were many policies taken, and this in this video we will be discussing all the measures taken or adopted by the Monetary Policy Committee. If you look into the Monetary Policy Committee, they have decided unanimously to remain focused on the withdrawal of the accommodation to ensure that inflation remain within the target level. Okay, this is one of the primary motive of the in the Monetary Policy Committee. They want the inflation to be tamed. So this committee is rationalized for its decisions on the policy rate stance. Sorry. We know that this increasing inflation is exerting some sustained upward pressure on the consumer price inflation, wholesale price inflation everywhere, or in each and every sector of Indian economy, inflation has affected. So, and also the ongoing war. We know that the war has not yet ended, it is still going on, and the ongoing war is also turning out to be a damper for the global trade as well as growth. In a world of globalization, whatever happens in one country would have its repercussions and implications on other countries as well, because the world is connected. All the countries are connected to trade, through movement of people, etc. So as a result, whatever happens in one country would be affecting different other countries as well. The faster pace of monetary policy normalization undertaken by systematic advanced economy is actually leading to a heightened volatility in global financial market, and this is reflected in the sharp corrections in major equity markets as well. Coming to the emerging market economies, we could see that these are also witnessing depreciation of their currency. It is not devaluation, but depreciation is happening. I think you might be familiar with the difference between devaluation and depreciation. So I don't want to go into the depth of that. Here it is depreciation happening. That means the demand and supply is making adjustments here, and the value of a currency has come down. That is what is happening. So, what is a global situation? We know that globally there is some kind of stagflation. Stagflation concerns are there, and this is growing and amplifying, and this has amplified the volatility in the financial market as well. This is feeding back into the real economy and further clouding the outlook. we have to see that in this situation, the Monetary Policy Committee is actually facing various challenges from various directions, and they have to address all these challenges and through their policies, right? The Monetary Policy Committee has noted that in such a challenging global environment, domestic economic activity is actually gaining some momentum, right? While inflation pressures have intensified further, we have to make it sure that the global economic activity and also the domestic economic activity are actually in momentum. These are moving. These are not stuck. So we have to make it sure about this, and also at the same time we have to tame the inflationary pressures as well. The upside risk to inflation has highlighted in April as well as in May 2022 policies, and inflationary pressures have become broad-based, and these are driven by adverse supply shocks. This is what we have told, and today the inflation what we have right in front of us is something which is created by supply shocks, adverse supply shocks, and as a result, there are growing signs of higher pass through of input costs. We know that when there is a high price of the input, high price of output, I mean if the output are priced high, that will have its repercussions on input cost as well. So what the Monetary Policy Committee has noted is that inflation is actually likely to remain above the upper tolerance level, and this would continue for the 3 quarters of 2022-23. So we cannot tame inflation soon, but but what they are trying to do is that gradually they think that they are able to control, or they are able to tame inflation. So in this context, the supply side measures taken by the government, it in reducing the excess duties on petrol, diesel, etc., would be helping in mitigating the inflationary pressures to some extent. Sorry. The Monetary Policy Committee, it has also recognized that sustained as well as high inflation, could unhinge inflation expectations, and as a result, it may trigger to higher and higher levels of inflations. Okay, so we have to tame inflation right now. This is something which is very important. As per the Monetary Policy Committee, they have decided to increase the policy repo rate by 50 basis points, and as a result, the present inflation would be at 4.90%. Sorry, the present repo rate would be at 4.90%. The Monetary Policy Committee have also decided to remain focused on the withdrawal of accommodation to ensure inflation, to tame inflation, and we will be discussing all of these in detail in this video. Coming to the assessment of growth as well as inflation, in the statement made by the Reserve Bank Governor, he had made several recommendations. It is not his own recommendations. The recommendation framed as a result of the Monetary Policy Committee decisions on various heads. He has given certain recommendations, certain decisions, certain policies, etc. So we will be looking into each of these in detail in this video. Coming to the case of growth, what he has pointed out is that according to provisional estimate released by the National Statistics Office on 31st of May, India's real gross domestic product growth is estimated at 8.7%. Coming to the GDP in 2021-22, it could be seen that this has exceeded the pre-pandemic level. Okay, going to the supply side, we could see that there are major categories which have surpassed the 2019-20 levels. If you look into the available information, you can see the recovery in the domestic economic activity thus has remained firm. Coming to the manufacturing as well as service sector, we could see that the manufacturing and services purchasing managers indices in the case of May has pointed towards further expansion of the activity, and we could see that the urban demand is recovering, the rural demand is improving, the contract wise in contact incentivized sorry in conduct incentive services related trade hotels, transport, these sectors have recovered. Capacity utilization has increased. Investment activity is expected to strengthen. So all these would give us a positive signals with respect to growth in the case of India. Improvement in the investment activity that has taken a pickup. Merchandise export have remained buoyant. This has taken a double-digit growth. Coming to the real GDP, and this is expected to evolve on the lines of April 2022. Coming to the case of rural consumption, this is also it is expected to improve. There is further improvement in the consumer confidence. There is improvement in household optimism. There is some reductions in negative spillovers. So taking all these factors into consideration, the real GDP growth for 2020 to 23, this is retained at 7.2% in quarter one, and this is estimate retained at 7.2%, with quarter one at 16.2%, quarter two at 6.2%, quarter three at 4.1%, and quarter four at 4.44%. So we could see that the risks are all it is almost balanced if you look into the growth assessment of India. Coming to the after growth assessment, let's see what is with respect to inflation, whether it has declined or whether it has overtaken, or what is happening with respect to India. In the case of the consumer price inflation, the consumer price headline inflation in April has registered a sharp increase to 7.8%, and this is for the fourth consecutive month that inflation has touched, or it has gone above the upper tolerance level of 6%. 6% is the upper tolerance level, and now it has crossed the upper tolerance level, and this is for the fourth consecutive time that it has crossed the upper tolerance level, and the surge in the headline inflation has seen across almost all the categories. Okay. Coming to the geopolitical situation created by war, created by global inflation, etc., we could see that we have to go for certain positive developments. This would include expectations on normal southwest monsoon, kharif agriculture season. So these are something which we are expecting to happen. Okay. So in such a scenario, further reduction in the state VATs and petrol, diesel across the country, this would be contributing to the softening of the inflationary pressures as well as expectation. We know that what we have as inflation right in front of us is something which is dominated by food inflation, fuel inflation, etc. Right. So notwithstanding these positive developments, upside risk to inflation do persist. Right. Not only with respect to fuel inflation, in the case of food inflation, etc., still persists. We are expecting a good monsoon. We are expecting a supply side measure. We are expecting supply side measures of the government. We are expecting palm oil export by we are expecting that the Indonesian government would be lifting the palm oil export ban, and we think that there are signs of moderation in the global industrial metal price indices as well. So we think that we have some positive signals in front of us. But at the same time, we have risks, right? And these risks emanate from elevated commodity prices. There are revisions in electricity tariffs, and there are problems with respect to input cost to selling price, with respect to the manufacturing as well as service sector. All these kinds of things are also there. The assumption of a normal monsoon, then the average crude oil price, all these kinds of things are actually based on all these things, some projections have been made. It might be noted that around 75% of the increase in the inflation projections could be attributed to food group. As I have already told, it is the food inflation and the fuel inflation that is dominating, right? Further, the baseline inflation projection of 6.7% does not take into account the impact of monetary policies action. With no resolution with respect to the war in sight, we have to think that there should be prudent monetary policy measures to ensure second round effects of supply side shocks. So the monetary policy actions, including withdrawal of accommodation, would be calibrated keeping in mind the requirements of the ongoing economic recovery. With that, we move on to the announcements with respect to the liquidity, financial management, or financial market guidance. Um, so, if you look into the case of the marginal, if you look into the case of this standing deposit facility (STF) and also the liquidity adjustment facility, here some interest rates have been made to 3.75%. Okay, and this is effectively a rate hike of 40 basis points of the fixed rate reverse repo of 3.35%. Following the repo rate hike of 40 basis point on May 4, we could see that in line with the emphasis of gradual withdrawal of accommodation articulated in April as well as May, resolution systemic liquidity has moderated in the recent period. Coming to a surplus liquidity, as reflected in the average daily absorption under the liquidity adjustment facility, we could see that here also there are certain policies taken by the Reserve Bank. The rate hike also triggered an upward adjustment in the benchmark lending rate by the banks. Coming to the Reserve Bank policy statement, again we could see that there was a focus given to an orderly completion of the government borrowing program as well. Direct fallout of the geopolitical tension and all the rapid pace of policy normalizations have also given importance. Several emerging market economies, currencies have faced depreciation pressures, as we have already noted. Coming to the Indian banking system, this has remained strong as well as it has remained as healthy. So this is what is identified the Monetary Policy Committee, and as a result, we are actually facing not that much problems when we compare our situation with many other countries. The strengthening of the banking sector and de-leveraged corporate balance sheets will be helping us in sustaining the economic recovery, and this is what is believed by the Monetary Policy Committee. I don't know what will happen because we cannot make any kind of predictions right now. Our world is going through an uncertain situation, so we cannot predict, but we should act. This is what we should do. Okay, even though we cannot make any predictions, we can't stay as idle, but we should act. We should make effective implementations of right kind of policies right now. With that, we move on to the external sector. At the assessment of the same, we could see that India's export have performed exceptionally well, but there is some kind of recovery that was weakening across major trading partners. The impact of the rising crude oil prices, especially petroleum, oil, lubricants, as a result of that, import bill has been increasing, right? But this has been partly offset by the export of petroleum products. As a result, we could benefit out of it. Now, some optimism in the external sector is that export of both goods as well as services and also remittances should help to contain the current account deficit, and this will be helping us to keep the current account deficit at a sustainable level, which would be financed by the normal capital flows. What were the additional measures taken by the Reserve Bank Monetary Policy Committee? Uh, so these were with respect to 5 different areas. Okay, on 5 different areas, measures were there. The measures were broadly based on 5 different areas, and first one is the regulatory measures for cooperative banks. Here, the limits for individual housing loans being extended to the urban cooperative banks as well as rural cooperative banks. And these were last fixed in 2011 and 2009 respectively. And these were revised. Okay, these were revised upwards by over 100%, taking into account increase in house prices, which would be facilitating better flow of credit to the housing sector. And this is what is expected. And coming to the dispensation available to the scheduled commercial banks and UCBs, it is proposed to permit rural cooperative banks to extend finance to the commercial real estate sector. Also, it is decided to permit UCBs to extend doorstep banking services to their customers. So, this will be helping the customers to avail banking services at their doorstep, and this would be helping especially the senior citizens and the differently able persons. Coming to the second area, that is the margin requirements for the non-centrally cleared derivatives. So the main objective here was to strengthen the resilience of OTC derivative market, and here the directions on the exchange rate variation margin for NCCD were issued, and in the second phase, it was proposed to mandate the requirements for exchange of the initial margin. Then coming to the e-mandates on cards and recurring payments limit enhancement. The e-mandate, it was introduced by the Reserve Bank, keeping in mind the benefits of convenience, safety, as well as security of the users, right? So, to facilitate the recurring payments like subscriptions, insurance, premium, education fee, etc., of larger value under framework, the limit was enhanced from 5,000 to 50,000 per transaction. This will be leveraging the benefits available under the framework and augment customer convenience. Sorry. Moving to the unified payment interface, here it was proposed to link RuPay cards with unified payment interface. Okay, and here at present we could see that UPI facilitates transactions by linking saving account or the current account through users debit cards. Now it is proposed to allow linking of credit cards on UPI platform. So which would be helping to provide additional convenience to users, and this would enhance the scope of digital payments. So that was an improvement. The final thing is that the review of Payment Infrastructure Development Fund scheme. The Payment Infrastructure Development Fund scheme, it became operationalized by the Reserve Bank of India in 2021 of January. The main motive was to incentivize the deployment of payment acceptance infrastructure such as physical point sale, mobile point of sale, quick response, etc. Right? Now, the new announcement with respect to this is to make modifications in the PIDF scheme by enhancing the subsidy amount, by simplifying the subsidy claim. So there will be many other steps as well. So these were taken to accelerate and augment the deployment of payment acceptance infrastructure in the targeted areas. In the concluding remarks made by Shaktikanta Das, what he has told is that whatever actions we take today, this will have its implications on the credibility of the monetary policy as well as the credibility of the Reserve Bank of the country. Right? India's recovery is proceeding apace, offering a space for an orderly policy shift. So, monitoring and assessing inflation pressures and balancing risk to growth. These are uh, two important goals in front of the Reserve Bank of India, and the road we have traveled during the recent past is indeed very challenging, very competing, etc. But we have gathered faith, we had gathered focus, we had gathered fortitude. So faith, focus, fortitude, all these have helped us to move along. Given the elevated uncertainties of the current period, we have remained dynamic and pragmatic rather than being bound by stereotypes and conventions. So, as a result, on the concluding remarks made by Shaktikanta Das, he told that definitely we will be working tirelessly uh, in the face of these kinds of challenges in order to attain stability with respect to the price level and without losing our goal on growth. Uh, Goal on growth is very much important. So as a result, it is very much important to uh, go without losing the faith on that. Okay. So that's all about the announcements made by Shaktikanta Das based on the Monetary Policy Committee recommendations and decisions. So that's all for today. Please like, share, and subscribe to this channel, and you can be a part of my Telegram channel as well as Telegram group. Please do that to discuss your doubts. That's all for today. Thank you.